Welcome to TradeTheNBI.com. This is John's reports for the 9th of May. Well, the continuation, we've gapped down lower for the open so far and already off 50 points back down to the lows. No surprise with what we're seeing from there. We had the NBI magenta pivot lower that created the start of the move late on the day Friday. They made a little pushback, but again, we're making lower lows, lower highs. And this is consistent. We're still going to see plenty of rips that will take place within this as people believe that things are cheap relative to this or that situation. Not surprising, however, general trend. You can see clearly too in the DOC increased rise in shorts within this setup. Still rising DOC red. I would expect to start to see that roll over. It was critical as they were improving in the shakeout here that had to continue higher, and failing to do so becomes problematic for it to maintain itself. And all of this is just a play out of everything that's been taking place over the last several months. The anomaly was the big short cover spike where everybody thought that things were about to implode, and it's going to be like that, and that's typically the way downturns work. A lot of bounces within them, which is fine because we see those taking place as they go. The NQ has been far weaker. Actually, with magenta still slightly above yellow, so the potential for turnaround pops a little bit stronger, but still within a general weak DOC reading. Longer term support, meaning that with the DOC red, is just that there's still institutional buying within it. It's just there happens to be a lot more distribution than the buy. And of course, this is what we were talking about from a treasury standpoint, and that becomes more attractive in these kind of conditions. And sometimes parking your money is better than losing capital in a declining market. Euro, it's getting desperate time for the euro because, like I've said, a breakdown below this 105 range really puts all the way down to 101, and that's just been a huge hit. But there's nothing good coming out of the euro. They're still promoting their banning of all Russian oil, and they've had some holdups on it though, because some places have actually reasonably objected to the insanity of that. But that's never stopped world leaders from doing things that aren't in the interest of their economies. From a gold standpoint, of course, with the market weakness, you tend to get drawdowns in there. But again, pullback from gold, of course, for gold bugs never makes any sense. And is it justifiable given what we see from an inflationary standpoint and things like that? Probably not so much, but as we've talked about, the ability to trade the paper value of it is far different than the actual physical commodity. And that becomes a bifurcation of it. And now that you've removed the whole Russian side of the gold trade on that, you got some disruption there that's makes it a little more difficult to just predominantly say it's going to go in one direction. From an oil standpoint, we're still way elevated from that, and that's going to continue to put pressure on prices throughout the entire supply chain because everything is relative to oil. So now we're down to 113 TLT, that just rising rates. It's going to continue. Expecting that down towards the 110 even, and the problem that you see, and this is where I get some hesitancy, is that within this consideration of GDP turning negative in the last quarter, the acceleration of that, it's the market in some categories is going to be anticipating the Fed stopping its tightening, and they believe that they'll back down because they always have. And the question becomes for some, it's like, and if they don't, and have to rein things in a bit, well, yeah, that calls for that case, like we were talking about, to the middle 3,000s for the ES. From a Bitcoin standpoint, we had that short appear just above that constant support 39, and nothing's changed. And I was talking about 34 was the next level that we had, and we gapped right down to it, and then slightly below it. And then, of course, from here, 28 is that final daily we've been talking about. And from an ETH standpoint as well, big gap down from there, and also suffering pretty significant from a decline standpoint, and not unexpected from well, the daily chart. Paint bar activated on it, but it's pretty clear every single one of those pivots has led to lower move. So no shocks within any of that. Turning to the 50K, we had this somewhat consolidation period going, and NBI White started to take the lead at the end of Friday, and that's of course what's led to the gap up, gap down and lower here at the start, and breaking down into the new lows. And turning to the 5K chart, we can see that pre-market action here. It was a slight gap down, and then it just broke below. Tried to come back all the way up, and has failed again. But intraday from Friday, you can see late Friday buyers usually they're short covering in that just to get out of the weekend clean. But we had some pretty clean signals all throughout the day. It was rather nice how all of that went. Intraday was mostly back and forth. Kind of fun to go backwards, been looking at it, but all been pretty darn clear with the paint bars, and the ranges have just been ideal. It's interesting because as we catch this weakness and the tiny little pops that go through, we get our turnaround signals, and it makes it fairly simple. I'm adding in a few of the other configurations now. I think I almost have that done, that will bring some of these green bars just a little bit closer to actually where we see the flip points, especially since we really have covered very effectively on when it flips to the alternative side. And you can see from the start of Friday action, and you're going to get a lot more of this back and forth in that wave, and that's actually kind of healthy because that's that true discovery of price, and the downdrafts are just a lack of liquidity buyers, and there's still plenty of money on the sidelines, so seeing 40-50 point rips is not going to be uncommon, and it just becomes a question of we'll start to see either from 5K or 50K when those algos start to kick in and recognize that they've got too much to one side, and then they're able to flip it back. And with as strong a position as a lot of people have short, there's going to be a lot of short cover rallies to wipe them out and move back below. So just be prepared for that kind of uneven event. Overall, daily, though, we can see exactly what is taking place there. As always, though, trade well. We'll talk to you later. You can look for me on Skype chat.